everyone. Jamie Trull here. Welcome to Power in Numbers, our live show that we do every single month on the last Wednesday of the month, where we talk about what's going on in the world of small business, the things you need to know. So we're going to go through the news, to-dos, and cues. Those are our three segments for this show today. And I really like this because this gives me the chance to really interact more in real time. When I'm creating a lot of the content for YouTube, sometimes there is a lag and I can't necessarily talk about the things that are happening right now and more current events. So that's what I love to do in this Power in Numbers Live. So I hope you decide to join me each Wednesday when I have this, or you catch me on replay. Either way, tell me you are here. Say hello in the comments. I'm really excited for some of the topics we're going to get to talk about today. So first of all, I have to point out, gosh, I always go the wrong direction. We have to point out my sponsor, which is Relay. So Relay is business banking. For those of you that have followed me for a while, you know that is my business banking platform of choice. So they are a company that works with a bank on the back end, and they are the company that really is able to, this is the first company I have seen. I looked for years and years to find business banking that allowed me to separate out my accounts into various different buckets, right? Because I want to be able to save separately for taxes and not have that getting mixed up in my money available for paying operating expenses or for paying myself or for business savings, right? So I love that Relay allows you to add up to 20 accounts and 2 savings accounts. And these are real actual accounts that you can use in your business for various things. So I absolutely love Relay. I have been singing their praises for a long time. I also have special deals with Relay. So go check out jamietrull.com/relay if you want to get a special deal just for signing up with my link. I highly recommend it. So thanks, Relay, for sponsoring today's Power in Numbers Live. So now we're going to jump to, I got to use my cool little transitions. I love that. Sometimes I forget to play those, but I had to play those today. So let's talk about some news. And I still, for I don't know, the 6th month in a row, we got to talk about BOI. Just for a minute, this is going to be quick, thankfully, this time. And I am really hoping this is the last time I have to talk about BOI. If you don't know what BOI is, it's the Beneficial Ownership Information Form. This is a rule by FinCEN, or actually it was part of the Corporate Transparency Act that was passed a few years back. But ultimately, this was that filing that small businesses were going to have to do. So if you were an LLC, sole proprietor, et cetera, you actually not a sole proprietor, just if you had an LLC, right? If you had a true, if you'd created an LLC or a corporation, you would have to file this beneficial ownership information that would give the FinCEN, specifically, who is in charge of financial crimes and enforcement, right? Information as to who the true beneficial owners were of that company. So a lot of times the reason that this was a thing is because some companies use shell corporations. It can be difficult to see who the actual beneficial owner is of those shell corporations, because one shell corporation might be owned by another one, and you have to really dig deep to figure it out. And this is how money laundering can happen. So ultimately, they created this law, they passed it through Congress, all the things, and then it blew up, right? So people were unhappy about it. The report literally takes 5 to 10 minutes. I do have a tutorial that I put out on my channel on how to do it. However, you don't need to do it anymore. So officially now back at the beginning of March, the Treasury Department put out essentially a statement saying we're not going to enforce this. But my advice at the time was, hey, it's still the law of the land, regardless of whether they say they're going to enforce it or not, right? It is still a law, and that's something to be aware of. And any kind of press releases or, putting information out on X, right? That's not binding in a court of law. So yes, they're saying they won't enforce it, but I was still kind of advocating hey, just be aware, it may still be a good thing to file because it is still the law of the land to report this. And it was, I believe the deadline to report was May 21st, which was a couple of days ago. And then they waited until that March 21st deadline, right? And then they put out some new information. So I was just there. I keep telling people like the best thing that you can do is to check the actual FinCEN website for updates on that. So that's the only thing that I check back whenever I hear of changes. I need to see what they're actually saying on the government website. So here is what it actually says now. And you can see up at the top, this is a little bit hard to see, I know. Let me see if I can blow it up just a little bit for you. Where is it? There. Okay, so it says updated March 21st, right? The day that everything was due. So clearly they were trying to get people to comply. So a lot of people did it. It's not a big deal if you did it and you don't need to. Great. There's nothing to do, right? It's totally fine at this point. But all entities created in the United States, including those previously known as domestic reporting companies. So if you are a US company and their beneficial owners are now exempt from the requirement to report beneficial ownership information to FinCEN. So you're exempt. Foreign companies still must report, and it gives some information about it. And then you can read the whole interim final rule. I always laugh about interim final rule. They had a ton of interim final rules during COVID. And I'm like, isn't that kind of an oxymoron? Interim final, like there'd be like interim final rule 27. And you're like, hang on. So who knows, but you can see more information about this over there. But ultimately, if you are a domestic company, it is no longer required to file BOI. Man, that was a saga. Again, if you already did it, no harm, no foul. You're good to go. And I will be sure to let you know if anything changes. I think we should be settled though, and hopefully I don't have to say the words BOI ever again, at least not on this show. Okay, so what else is going on? Let's talk about a couple other things. So there are a few things policy-wise I wanted to talk about. So we're going to talk a little bit about tariffs, y'all. That's like the word of, the time that we're in right now, tariffs. Because this could have an impact specifically on small business owners. And you guys know I try not to get political in here. I'm not really giving my opinions. I just try to look at the facts of the situation. Not to say I don't have my own opinions on the topic, but I really I like to look at the numbers. What do the numbers say? What do experts say? What is really going on here? And try to find the truth of the matter in between all the political spin that comes at you. So we're going to talk about Trump tariffs, and then we're also going to talk about some changes going on, the IRS layoffs and then rehirings and things like that going on related to DOGE and everything. So we're going to get into both of those things, which I know people have feelings about. But again, I'm going to try to really just talk the facts of the matter. And then you can, use your own opinions or confirmation bias to see it how you want to see it. I won't be able to change your mind probably on that. So tariffs. I'm going to give you an article again, just because I think it's really helpful. This is where I look, taxfoundation.org. I find it really helpful. They run the numbers on a lot of these tax policy changes. Okay, so it's a great place to look if you are interested in delving deep. Like I love some data and some analytics. So if you're interested in, delving deep, this is a great place to look. So this is, I'll put the page up here. So this is I put this into the chat. So you should be able to go grab this tax foundation and read it yourself, because I'm not going to go over all of it, but I will show some of it up here on the screen just to give you an idea. Okay, so this is really a deep dive into tariffs. It's also really helpful because I don't know about y'all, but I am like, which way is up these days? Like, what is going on right now? Are the tariffs on? Are they off? I don't know. Like, how do I know what's happening? And so there's a great timeline that says kind of here's what's going on. Here's what's, sometimes we think that a tariff is enacted, but maybe it was just talked about. So this is a great place to see actually like what is happening. So you can see kind of some discussion. This goes back a little bit more into time to see what tariffs are actually in there. So you can take a look, but essentially there are several new types of tariffs that are being talked about, or increases of current tariffs. So you'll want to see if it impacts your industry. This can impact a lot of people, right? So this is tariffs specifically related to China, to Canada, and to Mexico. Those are the biggest ones, although there are now talks of retaliatory tariffs against other countries that have tariffs on our goods. And so we're likely to see even more of this happening over time. So this is something, again, to look and see. It's not on everything, right? So you want to see if your industry is impacted. This is something you want to know about, though, because I have heard of some small business owners and actually individuals getting surprised by this. Okay, so these tariffs have come out, and what happens sometimes is you pay them, when you are, first of all, let's take it back a minute. Tariffs are taxes. They just are. They're taxes on the importer. The exporter does not pay the taxes. The importer here in the United States does, whether that's a business or an individual. Okay, so you are the ones that pay those duties. And I had a friend that recently, her daughter saved up money to purchase a sweater from a UK brand, but they must make it in China. And then she had it shipped to her, and it went through customs and it got to her. And then a couple weeks later, they got a strange bill that was for, it was close to 50% of the cost of the sweater that she couldn't figure out. She thought it said it was from UPS. She thought that perhaps this was a mistake or this was a scam of some sort, right? Turns out it related to that sweater, and it was the import duties that UPS paid for them and then was charging them back. Okay. So this is impacting, not just businesses, but obviously if you are a business that does a lot of importing, whether that's materials, whether that's finished goods that you resell, whatever it is, this is potentially going to impact you. You probably already know if it's impacting you now. But it's even having an impact on consumers and making things more expensive unless you're purchasing things that are manufactured fully here in the United States, right? Which is hard because the manufacturing businesses have left. And the question is, are tariffs actually are they going to be successful in bringing these manufacturing jobs back to the US? I have my thoughts. People will have their thoughts. I am not an economist to know, but right now in the interim, there is some chaos going on and things are more expensive. So people, if you are a small business and you are, again, here's a table of what's been affected. And here's, kind of steel, aluminum, there's various different things. So you can kind of look through this article to get a lot more detail on what these tariffs are, who's impacted. Again, here is a good kind of summary of what's been going on and some of the actual studies about it, because we like studies, right? We don't just want conjecture and political opinion. I want to see the studies. I want to understand how we really think this is going to affect us in totality, not just in the short term, also in the long term. Are we going to achieve the goals that we have for this? So this is just a really good article that I've linked in here that you can take a look at to see and, come up with your own opinion on what you think about it. But regardless of your opinion on it, it is making things more expensive in a lot of ways for the average American right now. So if you are a small business, here is my advice to you. Be aware of the tariffs. Be aware of potentially coming tariffs, okay? You need to be factoring that in to your profit margins, right? So that is something that if you are continuing to purchase from a supplier and you're going to get hit with tariffs, they might be surprise tariffs. You don't want to be in a situation where you're now underwater because you're selling things for less than the cost for you to procure them, right? You don't want to be in that situation. So we need to be aware of that. Now, the unfortunate part of that is that means raising prices on consumers. So that's the worry at the end of the day. But that is what the big retailers are going to do. And what happens sometimes is that small businesses, because we're not quite as price elastic, right? Small businesses sometimes end up bearing the brunt because they don't fully pass that along. In big business, that's an immediate, okay, we have a 20% tax. Well, now we're increasing prices by 20%. Sometimes they might increase it by more than 20%. Who knows? But that's kind of an automatic thing that most big businesses do. But small businesses don't often do that because also we have the heart and we're worried about our consumers and what is that going to mean for people being able to afford what we do. But again, what we don't want to do is put ourselves in a precarious situation and our businesses in a precarious situation because we don't have adequate profit margins anymore, right? We don't need to be, the martyr when it comes to that, because it's just going to put you out of business entirely, right? And then you can't serve anybody. So it's a tough situation that we are in. And it's something just to stay apprised of and be aware of. Maybe look for alternatives, see if you can find American-made alternatives. So for some, that may be a viable option. For others, maybe not. But it's just something to be aware of and have your finger on the pulse. And maybe, if you know the timing of those, try to finagle a little bit with timing, right? There is a date, I think it's April 2nd, when these retaliatory tariffs are potentially supposed to be coming in. So if you need to be, ordering things, if you are oh my gosh, my poor wine shop makers, okay? If you are selling wines from Europe right now, there is a threat of a 200% tariff on European wines. To me, like this is tough, y'all. I love some Italian wines. Like what are we doing here? I gotta have it's getting to summertime. It's French rosé time. Like, come on, everybody. So I really hope this one doesn't go through as a consumer, but that is just something to be aware of. And if you are one of those bottle shop owners and you happen to be watching me right now, maybe go make an order real quick. Now, they may not happen. And there's a good chance that these tariffs won't happen, or they'll be on and off again, because in some ways it looks like he is wanting to utilize them as a negotiating tool. Again, there are various different thoughts on how effective that is. So that's just something to be aware of. It could be, there's a lot of instability. And as business, we don't love instability, right? We do not love instability. As a small business, we specifically don't love instability. This is where that resiliency kicks in, and we just have to stay informed, but also know that at the end of the day, it's up to us to figure out that way forward, right? There's always a way forward. It may be harder for us, but that doesn't mean it's impossible. You are resilient and you got this no matter what is going on around us. It's about how we are really impacting our community, what we are doing in our businesses, and how we can make sure that we are staying financially fit enough that we can keep going even through adverse situations. We've been through things before. We went through COVID, for goodness sake. If you've made it through all of that, you understand that resiliency, that ability to adapt is going to be really key. And that's definitely the case right now. Okay. All right. So let's jump on to my next topic is the IRS. And y'all, there's going to be some very differing opinions here. And I'm really interested to tell you guys about this. Okay, so here I'm going to put this on screen as well, really quickly. Hold, please. So this is the IRS laid off about 7,000 workers. And this was in line with a lot of the DOGE cuts. These were mostly probationary workers, meaning they were newer in their roles. Now, if you recall, right, recently, as part of the Inflation Reduction Act, I believe it was, there was additional money that was apportioned to the IRS. And so some of that was going to be going to enforcement and things like that. And so there were additional hires. There were a lot of new hires. So a lot of these new hires that came probably from the Inflation Reduction Act are now the ones that were that were laid off. Now, a court in California came and said, nope, you can't do that. And so now those workers are kind of in limbo, where they're getting paid, they're getting their back benefits, all the things, but they're not allowed to work. So now we're paying them to not work. So I think in the middle of tax season, which is great, just great. So now we're in a situation where we have the worst of both worlds, where we're still paying people, but they aren't actually working. So what does this mean, though, as far as if the IRS goes through and has layoffs? What is this going to mean? A lot of the layoffs, when I looked into the details, and I just put that, I'll pull this up really quickly, but I just put an article about this that I thought was really interesting to read. I'll put that into the chat here, because it talked about how a lot of the people that were downsized were in the enforcement division. So let's see. So we just staffed up. The IRS just got staffed up, right? And now we are going through and they are cutting these 7,000 workers. But this talks a lot about what has been going on in the IRS as well. So let's see, mostly probationary workers. I'm looking to find where I saw it. So the question is this going to impact? Is there going to be delays that come from this, right, with the processing of tax returns? And what they're saying is no, because that most people aren't from the support section that were fired, but a lot of them were in the enforcement, meaning these were the auditors, right? The people who were responsible for auditing. So I think what's important here is that may be true, but I think just if we're thinking logically, if you lay off 7,000 people from a department, it may cause some, again, chaos, delays, frustration. There already were those frustrations. So in here, let's see. So this was really interesting. As reported, and I think this was last year, only 32% of callers reached an IRS employee last year during tax season. Only 30, this was last year when they were staffing up. And 29% of callers were able to speak with an employee during the full year. These are percentage of callers. So if you call the IRS, right, like essentially 2/3 of people give up before they even get a hold of them. I have tried to call the IRS. I have been there, right? So there's already kind of this overwhelming situation going on. So this is just going to add additional pressure to it, and it may slow processing and refunds. There's some discussion about that. It took the IRS an average of 180 days for the manually processed tax returns last year. That is crazy. That's for the manually processed ones, right? So that's just something really important to know, is that let's see here. This is, I think, a really interesting stat. A separate study from Yale Budget Labs, again, we like studies, shows that if the IRS shrinks by 50%, which is what's being talked about right now, the agency won't be able to collect revenues, resulting in as much as about $350 billion net of foregone revenue over 10 years. If staffing reduction leads to an increase in taxpayer noncompliance, losses could rise as high as $2.4 trillion. What does that mean? That means that if, so right now, the stat is about 85% of people regularly pay their taxes. There's a tax gap of about 15% of what should be being collected that isn't. That is largely higher income earners that are not paying taxes, right? There's some also lower income earners in there, but like the large majority of the money part of it is being driven by higher income earners and corporations. They know that to be true. So in that case, right, in the case that, we get rid of IRS enforcement and cut down on it, and does that then make it such that people, right, whether that's high income individuals, corporations, or normal people, does that make them less likely to report all of their income if the audit risk goes down, right? And so there's fear that, okay, not only are we not collecting this income that we normally would collect using auditors, we also potentially could have more people that try to get away with more things because they know that enforcement has been limited. I don't know. I don't know the answer to that. I know that, honest people are honest people. But I also could see that being an impact, especially maybe not immediately. But if you're more likely to get away with something, there will be people that will try to utilize those loopholes. Now, one important stat that I have always thought was really interesting is with the IRS. And let's take this, let's just take all of the feelings we have, right, about this and the waste, fraud, and abuse and all the things we hear about. Let's take it back a minute and just talk about if you're a business owner, right? The US is not a business. Let's be clear of that. It is not. But let's kind of try to analogize it to one, right? The revenue that the IRS, that's the internal revenue system. That is their revenue. Tax revenue is the top line revenue in the business. right? So it's akin to your revenue in your business. That is what the money coming in, right? That is the money that we're using to run everything. Okay. And then you have your costs. Now we're in a situation where we have less money coming in than costs. That's a problem. You're running at a net loss. That's where we have a deficit, all of those things, right? Not great for a business. We wouldn't want to do that. But is the solution in that case? Let's say you have a great salesperson, okay, who makes $100,000. All right. Do you cut that salesperson, even though to reduce your expenses, even though that salesperson is making you $1.2 million a year, right? If that's the amount of revenue that salesperson is bringing in, but you look at the expense and say, that's too expensive, I'm going to cut that person. Is that a good idea? As a business owner, we know absolutely not. Like, that is an investment. That person is paying off more than their investment. Therefore, it's not going to be helpful to the business to cut them. There's only so much we can do by cutting those people. Why do I say that specifically? Because there have been studies done that with auditors, right? For each dollar that is spent on enforcement for the IRS against, enforcement on corporations or high net worth individuals, all right, that every dollar essentially equates to $12. So it is going to generate an additional $12 in tax revenue from those higher income individuals and corporations. Okay, so that is what studies have shown to be the math there. So what we're doing is, right, we're haircutting our revenue over time. We won't see it immediately, right? But over time, we are going to see revenue decline, both because there are less auditors out there collecting it, and because there are more companies that know they can get away with stuff. So revenue is going to decline. So sure, we cut expenses, but to what end, right? Is that actually going to help at the end of the day? And if this was a business, we would say, heck no. And now we're talking about not just one person, but 7,000 employees. And in fact, they're talking about potentially laying up to 50,000 employees. Think about the impact of that. Is that really going to, what are we really doing here? What is this really about? Is this about waste, fraud, and abuse? Or is this about, potentially some preferential treatment to those who are high net worth individuals? I'm just asking a question. And the reason I say that is because there have, in the most recent, let me see if I have it up here. I was just reading this. Okay, here. There is a strategic operating plan that the IRS came up with after the Inflation Reduction Act. And it was basically like what they were going to be doing with the additional money that they were getting from that. And about 50% of it was going to be going to hiring and enforcement. And about 50% was going to be improving systems and things like that, which we all know is absolutely necessary. I am not saying by any means the IRS does not have things that it could cut or streamline. It absolutely does. Like 1,000%. We saw those stats on, customer service. It's already pretty bleak. But is the answer cutting even more? I don't know that that's the case. So let me share really quickly. Here. So this talks about the strategic operating plan. This was launched just last year. This was the IRS's strategic operating plan to audit wealthy individuals and major businesses. That was the focus. Anyone with a small business or making under 400,000 was scoped out of this. Their audit rates were not going to increase. However, the goal was to increase enforcement on larger companies. So audit rates for large corporations with assets over 250 million were set to triple. That was their goal, right? They wanted to increase audit rates tenfold for partnerships with assets over 10 million. And then wealthy individuals would rise from an 11% audit rate to 16.5%. And wealthy individuals was defined as people with over $10 million in income. The IRS will not increase audits for small businesses or those earning under $400,000. These rates will stay at historically low levels. So the staff that they were hiring in the IRS, a large number of them are the ones that were these probationary employees because they're newer employees. They were hiring to audit big companies to help close the tax gap, right? That 15% of people who owe taxes but are paying either not enough or are not paying any at all, right? That was the purpose of them. And so we're cutting IRS employees that were responsible for the enforcement that was largely going to be targeted at high net worth individuals and corporations. Um, and again, those people would have garnered, if statistics are correct that have been with these studies, every dollar of enforcement equals $12 of additional revenue, tax revenue. That's all I'll say about this. And that probably gives you a feeling. I just think as a business owner, I look at that and I say, what's really going on here? What are we really trying to do here? Is this really going to achieve the goal of eliminating, cutting down waste, fraud, and abuse? Or is there a different way to go about this? I think there are different ways to go about this. I do think that there needs to be some level of a methodical way. I was an auditor. Okay. I was an auditor of corporations, actually, for a public accounting firm. And auditing is not a thing that you go in and you just cut everything immediately without really knowing what you're looking at, right? Auditing is methodical. It takes understanding what you're looking at. It takes coming up with a plan, right? Like, companies need to have a succession plan to be able to keep running. So that's just something that I personally don't think is the best answer here. And I think that what we're going to see in the short term is a lot of chaos. I don't know what the long term will be. I don't know if it will be positive or negative. Time will tell. But I know in the short term, there's going to be a lot of chaos. And what that means for you is it may mean delays on your tax returns. It may mean less enforcement. I don't know. But that's more likely if you're a high net worth individual than it is if you are just a normal mom and pop small business owner. So we likely won't see too much in terms of benefit from this on our side. Okay, sorry. That was a bit of a spiel. But I wanted to talk about that because there's been a lot going on in the news about it. And I think it's really relevant to us to stay apprised of what's happening, specifically as it relates to things like taxes. Okay. All right. Let's move on. Shall we? We shall. All right. Oops, I forgot hang on. Let me play the. So fun. I love it. Okay. To-dos. We're at the to-dos portion of today's Power in Numbers Live. And y'all, it is March 26th. So we just passed the deadline to file either your S Corp 1120S, or if you have a partnership, your 1065. Those were both due March 15th. Actually, it was March 17th because the 15th was a Saturday. So they'll give you a little bit extra if it falls on a Saturday. Now, what do you do? I've gotten a lot of questions about, shoot, I didn't file an extension and I haven't filed yet, right? I have a walkthrough of how to file an extension, but if you're past that time period, you can't file an extension. So what's going to happen is you're going to have a failure to file penalty likely of $220 per month that you wait to file. So what does that mean? File ASAP. Just file your 1120S, file your 1065 as fast as you can, because you can no longer opt to extend that because we're past the deadline. So the longer you let it go, the higher that penalty could potentially be. There are some ways to apply for an abatement of the penalty, but again, you never know if you're going to get it. So the best thing is to just file. Now, you won't have any kind of interest on it because you don't have to actually pay taxes on your 1065 or your 1120S. Those are due at your 1040. So that's the good thing. It's just a failure to file penalty. Now, if you need to file an extension for your personal tax return, okay, you can absolutely do that. I have a full tutorial on how to do it on my YouTube channel. So go check that out. I have just put the link in the comments here so you can see how to file a extension. So again, that's due April 15th. So you want to make sure to go ahead and file that extension if you think you're going to need it. Even if you don't know if you're going to need it and you're thinking about it today, just go do it. I can tell you, I always think I'm going to meet the tax deadlines, but then I get to them and I'm so excited. I'm so glad that I, did my tax extension. I extend pretty much, always, even though often I will end up getting it done by the time. I like to extend just because it makes me feel better. Now, remember, that's an extension to file, but not an extension to pay. So if you expect that you're going to owe money, You want to be kind of calculating out and estimating that as best you can and making a payment so that you don't run into more interest and penalties for non-payment. Okay. So the only thing filing the extension does is it allows you to not have any penalties or interest related to the failure to file, not the failure to pay. All right. So go check all of that out. Also, because I have to just do a quick shout out, we're announcing today. The other thing you can go do today is go pre-order my book. I have a book, y'all. Crazy. So I just, this is my early reader copy of my book. It comes out in October, but you're going to start seeing it hopefully everywhere. This is Hidden Profit. It's about finding the hidden profit in your business that already exists there. So again, this is a book that is about learning about your business finances, staying organized, really getting a handle on it all and becoming more profitable. So go check out my book. I'm so excited. It's crazy to see my name on an actual book. That's bizarre. You can go to jamietrull.com/hidden profit, and that is where you can pre-order it. I'll put that up right now too. It is a fully published book. It is Simon & Schuster. It's Simon Acumen is my publisher. So this will take you to the Simon & Schuster webpage, and that will direct you. You can pick where you want to order it. You can order it at Amazon, Barnes & Noble, Books A Million, and bookshop.org. Bookshop.org is a great option because they do donate to local small booksellers, independent booksellers. So we love small business. So definitely pick your favorite way to support, and I really appreciate it. Okay. We're to the Q's section of today. Let's put that up for now. Okay, so here we are with the Q's section of the day. And I have a couple of different questions that were submitted to this Power in Numbers Live. So I'm going to go through those. Most of those are on tools. So I'm not surprised. We're kind of in the zone where, you know, it's the time to be rethinking like, hey, I wasn't as organized last year, maybe as I wanted to be. And now I want to do things differently this year. So I'm not surprised that a lot of the questions being submitted relate to various tools to use in your business to stay organized. Okay, so we're going to talk through that. This first question, let me actually find the question that was submitted and I can put it up. Okay, this question was from, who's this from? Julie. And Julie asked, hold please. Julie wanted to know, do I really need to keep all my receipts and what is the easiest way to do that? Okay. Do you really need to keep all your receipts? Yes and no. Yes and no. So here's my opinion on it from a bookkeeping standpoint. Receipts themselves don't really mean anything, right? The key is to have documentation of what the receipt was for and why it was for business. How is it ordinary and necessary as a business expense for your business, right? That is the key when it comes to receipts. Now, what I do when I get paper receipts, right, is I will snap a picture of it and I will upload it. So that can be either to many of the accounting softwares have that ability, or if you use something, let's say if you are using Relay, our sponsor today, right, they have a whole receipt capture functionality that will request, essentially, if you spend money on your Relay debit card, it's going to request that receipt from you and you can upload it directly from your phone. I think that's really cool. I have a whole, actually have a whole entire video where I walked through that kind of receipt capture functionality that is built into Relay. So I love that from a banking platform. It allows you to really easily keep things organized without having to spend like a bajillion years doing it. So here's the video. It's on YouTube if you want to look for it. But like I said, there are other options too within, if you use, QuickBooks or Xero, some of my recommended accounting softwares, they also have some functionality built in there often. So I do recommend keeping it, but you don't have to keep the physical paper receipts. And the key is to, again, make sure you document it. So whether that's writing it in there, writing it in the software, right? Somewhere where you're going to have it. Because the key is that, like, if you are ever audited, now, hell, maybe the IRS is going away. We don't have to worry about about audits ever, in which case, who cares if you keep your receipts? But I think if you are more in the camp of like, would rather do things the way I'm supposed to because you don't want to get in trouble, then I would definitely recommend still continuing to keep some form of documentation of why those expenses were business expenses and that you actually had made the expense, right? A little bit more important when it comes to things like cash. You're definitely going to need to have more receipts if you spent money in cash because you can't tie that to like a credit card statement or a bank statement. So that's something to be aware of is if you're going to substantiate cash transactions, you might need a little bit more to keep. But again, you can use these tools to capture those receipts as well. All right, let's see. So where shall we go now? I had several questions. Oh, and just before we finish off there, I will put up my Relay link if anyone is interested in signing up for Relay. So we always give specials to people who sign up with our links. And so you can go check out more about Relay there. All right. So I did have a couple questions. I've been putting out more content around QuickBooks alternatives. And the reason for this is y'all have asked for it and asked for it and asked for it. So you might see that there is a lot of content on my channel over the last probably like 60 to 90 days that is talking about QuickBooks alternatives. And the two that I've been recommending are FreshBooks, especially for service providers, solopreneurs, freelancers, and Xero if you're looking for something that is a little bit more akin to QuickBooks, but isn't QuickBooks. Xero is a great option. I've actually been using both. I went through a full migration. I have two different businesses. So I went through a full migration for each business to understand how it works. And I've been playing around in these systems. So I've been making content as I do that, which has been really kind of fun to do. And people have really enjoyed it. So definitely, check that out on my channel if you haven't seen it. But I did get a couple of questions that were submitted related to I think Xero specifically. Let's see. So here, I'll do this. We'll go with the question from Maria first. So Maria said, how does a small business go about getting help setting up Xero accounts to accurately track finances? We tried Xero 10 years ago. It's a very different product than it was 10 years ago, I got to tell you. We're trying it again. However, we're running into the same issue of how to properly set up accounts to log transactions. Xero offers services, but they're attached to ongoing CPA services, which we prefer not to use. Okay, so there are lots of bookkeepers that can help you get set up. So what I will say is look for a bookkeeper that is certified in Xero. So one way to do that, here Xero actually has a list that you can go to. This isn't going to be inclusive of everybody, but this includes all the people who are actually certified in Xero. And those aren't people that work for Xero. These are small business owners largely who have independent firms. So you can go check out those advisors, maybe find somebody there. Some of them may just be there if you want to do it, yourself going forward, and you just need them to help set you up. A lot of them will do that, right? So if you don't need them, or maybe if you do want to keep somebody on to do the bookkeeping for you, you can do that. So that's definitely an option. And also just, there's not as much content on Xero. I'm working on that, right? There's tons of content on how to get set up on QuickBooks and all the things on YouTube, right? Xero has less. There is still some. I'm starting to make more. So I would also say kind of follow this channel and give me your recommendations for things you would love to see specifically on setting it up. But I just did a video. I've done 2 videos so far that go into some details about Xero. One of them was exactly how I transitioned in under an hour to Xero. So how I set up my chart of accounts, things like that. So if you're wanting help with that, this is a great video to go watch and see how I got set up. Again, getting everything transitioned, got my opening balances in there, all the things. It was really actually much easier than I expected even. And there's also, I have another video that I just put out about tracking categories. So if you're looking to figure out how to set up tracking categories, I have that video. So it depends on if you want to do it yourself, if you want help. If you want help, definitely go to this advisors list. If you want to do it yourself, follow my channel. And ask me questions for different things that you would like to see me demonstrate because it's a little bit different for each business, how you want to get it set up. The key is really thinking about what's going to be useful for me to see as a business owner, right? Like what information do I want to have at my fingertips in order to make the best decisions possible. And more than likely, right, you can set up the system to be able to see that. It's a matter of how you set it up, though, and that can be really key. So definitely check out those resources, and hopefully that helps. Okay. So another question, let's see, another question about Xero was from Eric. So Eric said, can you use your 90% off affiliate price after you've used the free 1 month for Xero? So I have, right now, I think it's 90%. It did change recently, but it's still a huge discount. So I have a 90% off for 6 months on Xero. If you're interested in that, you can go to my link, jamietrull.com/Xero with an X. And that's how you can sign up. So it's 90% off for 6 months right now. If you do the free month, though, you can't use it. So that's the problem. So it depends. Have you done anything? What I'd say, Eric, is if you've already gotten everything set up and you don't, and all of that, and you've used your free month, there's probably not anything that I can do. You can try to email us. I can see. You can email us at support@balancedcfo.com, and we can try to see if we can reach out on a one-to-one basis. But in general, when you're signing up, if you sign up with my link, then make sure to sign up for the full 6 months. And versus, and you can refund at any time, but it's only a couple of dollars a month because of the 90% off. And you can't do the 1 month free and still get the deal. So it's much better deal over that 6 month time period to just forego the free month and, pay the 90% off for 6 months. So that's what I would recommend. If you have not done much in your Xero file yet, you can restart it. I would just sign up with a different email address and start over. And then you can get my deal for the full 6 months. That's not an ideal situation, so I'm not sure which is best for you. But that is one of the things. The free month is its own thing. But again, because this deal is so good, I highly recommend just doing the deal. Right? It's only for new customers. That's the problem with trying to combine it with the free month and then the sign up. The sign up bonus is only for new customers. And once you have done the free month, you're not considered a new customer anymore. Okay. All right. So let's see. What else? I had one more question again about tools to use in accounting software. So this question was from Barbara. And I wanted to make sure that I answered that. Oh, wait, this is someone corresponding. Oh, that was the question. Okay, so this question, also looking for alternatives to QuickBooks, as some of my businesses are very small. Do any of your options include payroll? It sounds like what you've looked at in the past were 2 separate programs. Doesn't anything have the ability for not complicated payroll? So here's what I'll say. Those are 2 different systems, and they're always going to be 2 different systems. It might be the same company might have, like, for example, QuickBooks has QuickBooks software, and then QuickBooks has payroll that you can add on. But it's another program entirely. It's just something you can add on pretty easily within QuickBooks. So yes, they all have the ability and they all integrate really well. The key is they're 2 different purposes, right? So accounting software is really focused on, reporting for taxes, your profit and loss, making sure that you're logging your expenses. Like, that's really the purpose of accounting software, is that historical record keeping. The purpose of payroll is to pay your employees. It's a different purpose, right? And it's a different functionality as well. So while you have companies that maybe have, a segment that does one or the other, they are typically going to be, even if the name brand is the same, they're 2 kind of separate sides of the coin, right? So I highly recommend, rather than saying, well, I use QuickBooks, so I'm going to use QuickBooks Payroll, I would look for what the best payroll solution is for you, because they all pretty much integrate now. So if you're using Xero has a direct Gusto integration, or you can use any other payroll that you want. So do some research on what makes the most sense, because they all integrate in terms of being able to bring those transactions over, categorize them well. It's just, you're going to have kind of these 2 different systems potentially. So you want to pick ones that do what you need them to do, right? So if the impact, like what payroll you choose is going to be impacted by, do you want any HR capabilities? Do you want to potentially in the future add on, a 401k or, any other benefits, things like that? Or are you just looking for straight payroll? Do you have one employee? Do you have 100 employees, right? Like it can make a difference. So hopefully that makes some sense. Okay. That was it for today. That was our Power in Numbers live for March 26th. I hope this was helpful. I'm really curious to hear your thoughts and comments on things. Please make sure to join me again next month. Hopefully, I don't have to talk about BOI ever, ever, ever again. But we shall see. You never know. Thanks, everybody, and I'll see you next time.